Hey there, welcome back to the channel. So I'm going to just give a quick walkthrough explanation of my orb, my opening range breakout strategy, how I use it in the trades that I take. So let's jump into it. All right, so if you've seen any of the Instagram reels that I've made specifically about this strategy, then you know pretty much everything I'm about to explain. But just in case you haven't, I will link that Instagram page down below and I'll give you guys a quick walkthrough right here. Now, you want to make sure that you tune in for future videos because after I explain this strategy, I am going to be doing forward and back testing on this strategy so that you can see its effectiveness in real time. So this is your first 30-minute candle. This is the 9:30 candle. And so you want to mark the high and the low, or the low and the high of that first 30-minute candle. And all you're doing is then waiting for a 10-minute candle to close outside this range. Obviously, you shouldn't just show up to the market at 10 a.m. You want to know what news is coming and be able to plot other levels and know what's going on overall in the market. But in reality, you don't have to take a trade. There's no rush for you to take a trade in the open when things are extremely volatile, right? If we just go drop down to the 2-minute time frame really quickly, one thing that I want to point out is inside of this first 30-minute candle, things were pretty wicky, right? This one candle by itself has a range of 100 points, right? So even on MNQ, that's enough to wreck some of these smaller prop accounts. So the beauty of this strategy is in the waiting because you're waiting for things to cool off and become easier to trade. We go from the 30-minute chart, right? We're on the 30, you mark the opening range high, the opening range low. Great. That's very clear. Then you're going to drop down to the 10-minute time frame. From the 10-minute time frame, all you're going to do is wait for a candle to close outside of this 30-minute orb range. I typically like to see that the candle closes outside of this range with a sense of strength. So you see a candle that closes well beyond it, not just like a hair beyond it, and not just something with like a super long wick, especially not if we break a key level, such as if we came down, we had a wick that broke this pre-market low area, and then the wick snapped back up. I would say, oh, key level has been broken. This probably isn't going to have follow through. And I would have to then, of course, wait and to find out for confirmation if we're going to go back to the upside or if we are going to trail down. So in this case, we do get a 10-minute candle closes outside of that orb range. Perfect. Then all we're going to do from there is we're going to put that 20 EMA on and we're going to drop down to the 2-minute time frame. So from the 2-minute time frame, we're just waiting for a 2-minute 20 interaction. On this particular example, we did have an interaction right here that under normal circumstances I would like. However, the time of day is also important. You have to be mindful of that time of day. The number one thing that occurs after 10 a.m., right? Because all your news posts are typically like 9:45 or 10 a.m., right? And then with the exception of FOMC, which is at 2 p.m., the only other thing that routinely happens is at 11:30, you get the London market closing. All right. You do also have some bond auctions that occur at 1 p.m. and you might have Fed speakers and all that stuff. But on a consistent basis, at 11:30 every day, you have that closing. One thing you want to be mindful of is that every single day in the market, right before closing, you always have algos that hit and then it changes the volume and the way the orders flow. And here's the other thing that occurred here too. If you look, you'll see that the first thing we did on this 11:20 candle is wick down. So we wicked down, we broke this low, and then we started to rise back up. So you can see that we wicked down below these lows, right? Because this is your 11:18 candle. So now your 10-minute candle's closed here. Here's the education and price action. The first thing we did was wick down and we closed back up above this candle's close. So this tells me there's a likelihood that this is going to go higher. And I think that it's going to take out the high of this 10-minute candle, which it does. So I'm waiting for that to play out and then to see, do we push over that and hold it, or do we come back down under the 2-minute 20 EMA? Simply put, just understanding that waiting for the London market close, which occurs right here at 11:30, helped me stay out of a potentially losing trade. Because if I entered in here off the 2-minute 20 and saw this little rejection and I put here, my stop would either be here or it would be here. And either way, I'm getting stopped out on this trade and I shouldn't be, right? And the target would be low of day. So by waiting and just seeing how this played out, I was able to protect my account and capture that winning trade. So the price moves up, the price moves back down, and then this is exactly where I took entry. This was talked about in the Discord live. Everybody saw me take this trade actually live and talk about it. All right, so there you have it. It's just really a super simple explanation of the strategy. Recapping the strategy really quickly. 30-minute opening range. Wait for a 10-minute candle to close outside of that range. It's a strong close outside. I'll keep going. Drop down to the 2-minute time frame. Add the 2-minute 20 EMA. Wait for appropriate 2-minute 20 EMA interaction. You take your entry here. You go stop above the candle high that broke the 2-minute 20, and your target is low of day. That maximizes your risk reward, maximizes your return off of the trade. As always, I appreciate you for watching, and I'll see you in the next video.